The majority of companies have reported, and 66%. It doesn't work. Come on. The smart board isn't very smart. Kate, please help. Hello folks, this is Hixon Zuercher with Hixon Zuercher Capital Management with our monthly educational market update. Today I'll be talking about all the events of April and how that impacted the market and what those events might mean for you as an investor. So April was a great month in the market. We ended up with positive gains for all three of the major US indexes. The NASDAQ was up 3.4%, the S&P 500 up 2.7%, and the Dow up 1.3% for the full month of April. April's performance wrapped up a 4-month streak, which turned out to be the best 4-month streak we've had in about 9 years for the market. So what happened last month? Well, we received a couple of reports that came in better than expected. First being GDP, so gross domestic product came in better than expected for the first quarter of 2018. Analysts were expecting GDP to come in at 2.5%, but actually came in at 3.2% for the first quarter. This marks the best first quarter GDP number since 2015, and the first time we've had above 3% growth for the first quarter of a year. Corporate earnings have also been surprisingly strong. For months, analysts have been talking about how the 2018 corporate tax cuts would no longer help profits. And so analysts were expecting some choppy results for earnings this quarter. However, through the first full week of May, we've had the majority of companies report, and so far 66% of those companies have beat their earnings estimates. That is the best reading we've seen in the last 3 quarters. So that's a positive sign for earnings. Earnings season isn't quite over yet, and that number could change a little bit. But so far, the positive results from corporations is what's driving the market higher. Looking at how the market responded to that, here we have the S&P 500. It's a 1-year chart. And what you can see is the last full week of April, the S&P 500 exceeded the prior high, which was set in September 20th of 2018. Before we had the big correction of the fourth quarter of last year, the market had recovered all of that correction and went on to achieve new highs until just this past Monday, May 6th. The market, you can see this week, has had a bit of a sell-off as the market is digesting concerns about the trade war and talks with China. So hopefully that will be resolved soon. We'll have a lot to analyze here over the rest of the week and over the weekend once we see how that plays out. Here we have the major market indexes for the full year 2019, and what you can see is that all 3 of the major market indexes, the NASDAQ, the S&P 500, and the Dow Jones Industrial Average, had double-digit gains going into this week. But now the Dow is up 9.6% year-to-date, the S&P 500 13.3%, and the NASDAQ 18%. So we're off to a great start. This sell-off this week might give you an opportunity to think about putting some cash to work if that makes sense with your financial plan. As always, we're here to help you determine how all these events impact your investment portfolio and your financial plan. Remember that what we talk about today is not advice, but we are here to help. If you have questions, please give us a call at 419-425-2400, and we'd love to sit down with you, chat about your goals, and see if you're on track to achieve them and how your investment portfolio would support those goals. Until next month, thank you for watching and have a good day.